everyone. A very good afternoon. You're watching the newsroom on ET now. I'm Mubina Kapasi. Markets, meantime, are plummeting in trade. We are seeing the markets fall quite significantly, close to 1% gone for the Nifty as well as the SENSEX. We have NIT numbers as well that have just released. There's a decline on the top line as well as the bottom line. The revenue has come in at 219 crores. The profit after tax has plummeted quite significantly. And that's, of course, NIT Limited for you. Stock price, meantime, just a decline of about 0.7%. Not much momentum really seen in the stock. Well, let's flag off more movers and shakers then. And first up, it's got to be TVS Motors. Look at the momentum seen in this stock. Yes, we had the second quarter numbers that were released, but now there's also an upgrade from CLSA to outperform from SEL. The target for TVS Motors is 435 rupees as they believe that the risk-reward ratio is turning positive. The management expects marginal growth during the festive season. And then, of course, there was that focus on market share gains by the company during the last 5 years, which has led to better earnings growth. So that is something that's causing them to be pretty optimistic on, a stock like a TVS Motors. HPCL and yes, remember that we at ET now told you first about how the government may be asking PSUs to announce buybacks. HPCL will be mulling a buyback in the upcoming board meeting, but in anticipation of that, we've already seen the stock price rally quite significantly. Another stock that's surging, and that too in double digits, is a Blue Dart. This is on the back of numbers. Nice up move over there. Revenues have come in at 864 crores versus 800 crore rupees. Further, we also do have the profits, which have surged quite significantly, almost 3 times, from 14 crores to now 42 crore rupees. And Laurus Labs as well is a stock in focus. Quite a rally is what we are witnessing in this counter as well. All right, well, moving on, let's now connect with the management of Canara Bank. The company has delivered its second quarter numbers. The profit after tax has dipped, but the NII has risen. And additionally, even the asset quality has improved. Mr. L.V. Prabhakar, the MD and CEO of the company, now joins us on the show. Good afternoon, Mr. Prabhakar. It's been a pretty good quarter in terms of growth as well. What were the key contributors?
See, last time also I said that one thing is we are controlling on the expenses. Expenses in the sense both interest paid as well as other expenses. The other one is we are concentrating more on the recovery, especially recovery in return of accounts. And I think these two things have helped us a lot. If you see our recovery during the current quarter, about 1,500 crores we have recovered under cash recovery, and about 449 crores under return of accounts. This has contributed a lot to our operating profit and then to the net profit.
Okay. What are the credit growth targets that you have for this year? Do you foresee any challenges?
No. As far as my bank is concerned, if you see, we have given a guidance of about 6 to 8% credit growth. As on date, our credit growth domestic, it is about 4.77%. And if you see our retail credit, we are growing at about 9%. And especially in housing loan, if you see, we are growing at 13%. So I think going forward for Canara Bank, we will be comfortably able to reach a credit growth of about 6 to 8% without any difficulty.
So, what sectors look robust, and provide a good lending opportunity? Will you be targeting any specific segments?
Yeah, first one is, as usual, retail. We'll be concentrating more. Housing, yes, as on date, we are growing at 13%. And I think comfortably we can go at 20%. Then agriculture, yes, we'll be concentrating on that. MSME. And then now, since we are getting inquiries from the corporates, we will be concentrating on corporate growth also. And putting together everything, I think we'll be in a position to achieve about 6 to 8% growth.
What's the outlook on provisions, and what's the approach on providing for the same? Are we, doing so aggressively or only where necessary?
If you see my provisioning, we have one that big NBFC account which we have declared it as fraud, where our outstanding is about 3,900 crores. And we have taken the staggering as far as provisioning is concerned. And in 4 quarters we are doing. We have started from Q4 of 20, and we did in Q1 of 21. And whatever we are supposed to do in Q3 of 21, about 834 crores, we have done that provision during the current quarter itself. And apart from that, about 125 crores extra provisioning we have done because of the standstill clause which is there. And in addition to that, already we have about 1,034 crores as provisioning for the standstill amount which we have projected as on 30th June, which is about 10,300 crores. But as on date, that amount has come down to 4,000 crores. So for to make our balance sheet more strong and to be prudent, we have made provision which is to be done in the next quarter during the current quarter itself.
Okay, what's the outlook on NPA and asset quality, and does it include pro forma?
See, if you see my standstill amount, as on 30th June, as I said, it was about 10,000 crores. Now it has come down to 4,000 crores. Even if I say that about 25 to 30% of this slips, even then I think the slippages will be under control, and it will not be a surprise for me because whatever is going to slip, I have already accounted for.
Okay, what about net interest margins and the subsequent impact of low-cost deposits? Are you gaining, benefiting from the same?
If you see my savings bank growth, it is growing at about 13+%, and CASA it is growing at 14.4+%. And last time, as I said, that we are concentrating in reducing the cost on deposits. Now, if you see year on year, last year it was about 5.55%. Now we have brought it down to around 4.35%. I think this cost reduction really helped us in increasing our NIM to 2.82%, which is, I think, as on date, is a decent NIM.
Could you talk to us about the capital positioning? You've done 2 fundraisers this year. What does that do for your adequacy and provision needs?
You might have seen that in the current quarter, we have already raised about 1,200 crores, 81 bonds at 8.3%, which is very competitive rate. And March of this year, we have already raised about 3,000 crores in Tier 2 bonds at 7.18%. And we are planning to raise another 5,000 crores as equity in the coming year.
Okay, what about synergies post-amalgamation? Anything of note or any specific benefits derived?
See, after the syndicate bank has been amalgamated with the Canara Bank, we are seeing a lot of synergies. The talented people which were there, now they are in our bank and they are contributing a lot. And good customers, especially the potential customers and high net worth individuals which were there in that bank, now they are banking with us and we are providing them good services, and because of which I think the figures are visible. The savings bank growing at 13% and CASA growing at 14%. And retail term deposit, it is growing at 18%. So I think we are seeing a lot of synergies because of the amalgamation. And going forward, I think we'll be getting more advantage of this amalgamation.
Okay, great. Well, thank you so much for joining us today, Mr. Prabhakar, and talking to us about your second quarter numbers. That's Canara Bank for you, and we have lots of corporate earnings as well that are being delivered. We had BPCL, SIS as well. We spoke to both of these companies earlier in the day on demand revival, on what the on-ground activity is like, how the numbers shaped up. Listen in.
Actually, marketing numbers are looking, as in October, as we speak today, the marketing numbers have reached the same levels of the previous 2019 October for both MS and HSC, which are the main products. Now, what we have done is that as a strategy, we have been reducing the throughput and regulating the throughput in our refineries to ensure that we produce to meet the domestic demand. Because, as I was mentioning, the crack spreads on a major products are still abysmally low. And therefore, it makes no sense to produce more and export the products. And we had a higher level of inventory of products in the months of April, May, and June because we had to process more crude which was procured in anticipation of normal demand, which petered out due to the pandemic. So now going forward, today we are operating the refineries at about 85-87% level. And from the month of middle of October onwards, we are ramping up the throughput. Increasing throughput is not an issue. Both the refineries have taken shutdowns in anticipation of the increased demand.
You know, private security, cash logistics, facility management, which is essentially hygiene and sanitation, these are essential services. You know, their demand grows when the economy is doing well, but even in crisis, the demand does not contract. And our H1 results are a testimony to this fact. We have grown 5% over the previous year in H1. More importantly, in March 2020, pre-corona month, our consolidated revenues for the month were 746 crores. And in September, they stand at 776 crores.
All right. Well, those were, of course, the big corporates who spoke to us earlier in the day. For now, we'll take a very short break. Hi, everyone, and welcome back. You're watching the newsroom on ET now. We have IOC, which has just delivered its second quarter numbers. I have a profit after tax figure which has come in at 6,025 crore rupees, a surge from the corresponding quarters, 468 crore rupees, naturally on account of the sharp decline in the cost of materials consumed. That is something that has caused quite a surge to come by in the EBITDA as well. In fact, my PBT is coming in at 8,373 crores versus 395 crore rupees. I'm just trying to pull out the calculation of roughly what the EBITDA number is, and that's really where a significant amount of surge has come in. But yeah, okay. I have the EBITDA number which has come in at a little more than 10,000 crore rupees, 10,191 crore rupees. That's where the EBITDA has come in. You know, if we have to sort of look at all these numbers, IOC, BPCL, HPCL, there's one thing for sure, that marketing margins, all these margins would perhaps have been, you know, a bit lower, but again, the whole play around these OMCs was the way oil prices dipped, really, you know, and that's the cynosure of all eyes, you know, when it comes to IOC, BPCL, HPCL, etc. I'm just going to glance through very quickly if they've given us the GRM numbers in their press release or anything like that. You know, honestly, I really don't see anything of that sort right now. Can't really find the inventory gain number either, so we just have to wait for some more information from the management, because inventory gain, GRM figure, these really are going to be key to watch out for. Basically, what were the refining margins like? So I guess we'll just wait out for those numbers. Okay, well, moving on, Times Network Special Investor Education Initiative, Nivesh Ke Fande, will seek to guide investors on better managing their financial portfolios and also provide them with simple explanations on how some financial products work. So on this edition, we're looking at ETFs, or exchange traded funds.
One investment avenue which has been gaining popularity over the last couple of years has been exchange traded fund, or ETF.
That's true. Now, ETFs are funds that invest in a debt or equity index or commodities like gold.
Yeah, you know, their expense ratio is low since they are passive investments, so they're available at a low cost to investors.
For example, an ETF that's based on a market index will invest in stocks of the companies in the same ratio as they're represented in the index.
So the performance of that ETF will rise and fall almost identically to the performance of that index.
To invest in ETFs, an investor will have to have a demat account, as they are bought and sold through the exchanges.
And this very aspect makes ETFs highly liquid, since they can be bought and sold like regular stocks at any given point of the day.
So do consider adding ETFs to your portfolio. That's all from us on this edition of Nivesh Ke Fande.
Well, that's, of course, in our latest Nivesh Ke Fande initiative. Okay, moving on. After beleaguered DHFL promoter Kapil Wadhwan wrote to the RBI appointed administrator offering assistance to lenders by monetizing his personal and family assets, ET now learns from sources that legal advisors to Administrator R. Subramanya Kumar have responded to Wadhwan, and the letter says that Wadhwan's offer is malified and illusionary. Priyanka Iyer joins us with the details.
Well, yes, a letter has been written by the legal advisors of R. Subramania Kumar, who is the RBI appointed administrator for DHFL, and this letter has been written in response to Kapil Wadhwan on behalf of Mr. Subramania Kumar. Remember, Kapil Wadhwan had written a letter to the administrator listing down his family's personal assets and offering them to monetize them to help in the resolution process for DHFL, and he has said that these properties are valued at over 43,800 crore rupees. So what is the response coming in? Well, first up, the legal advisor's letter says that Wadhwan's offer is malified and illusionary, and very importantly that the valuations cited by Wadhwan do not appear to be a true reflection of the fair value of the properties. The valuations that he has listed are grossly inflated is what they are saying. They have also said that the suggestion that these properties are being offered afresh is false, because DHFL already has legal and equitable interest in the properties that have been listed by Wadhwan. And also they've brought out the Grant Thornton audit report in various parts of the letter and said that money has been routed through illegal means to these properties that Wadhwan has listed. They have also highlighted the timing of Wadhwan's letter, saying that he had sent it on 17th of October, which is the same date as the bid submission deadline, and that is mainly an attempt to misguide the committee of creditors as well as the resolution applicants and cause confusion in the minds of shareholders. So they have said that any attempt by Wadhwan to derail the resolution process will be strongly resisted, and instead they have urged Wadhwan to cooperate and provide appropriate clarifications. They have clearly said that his offer cannot be accepted and basically is illusionary.
Okay, Priyanka, thanks so much for that. Well, with that, we'll wrap it up on this episode of the show. Thanks for watching.